Context and why this matters. 1.1 Yaska 3 Zakers. Let's start with the basics, because understanding this can save you hundreds or even thousands of dollars. Old Age Security is a monthly payment from the Government of Canada for Canadians aged 65 and older. It's not based on how much you contributed during your working years. It's a benefit you qualify for simply by meeting residency requirements. As of 2026, the maximum monthly OAS payment is indexed to inflation and adjusted every quarter. Most seniors receive this payment automatically once they turn 65. But here's the critical part. OAS is income tested. That means the government looks at your total income from the previous year, and if you earn above a certain threshold, they start taking back part of your OAS. This is officially called the OAS recovery tax, but most people call it the clawback. Now, when we talk about income, we're not just talking about employment income or investment income. The Canada Revenue Agency counts almost everything as income, including withdrawals from your RRSP or your RRIF. That's where the problem starts for many retirees. You might think, I saved that money. I put it into my RRSP years ago. It's mine. And you're right. It is yours. But when you withdraw it, the CRA treats it as taxable income in the year you take it out. And that taxable income is what determines whether you hit the OAS clawback threshold. This issue is especially relevant in 2026 because the income threshold that triggers the clawback has been adjusted based on inflation. For the 2025 tax year, which affects your OAS payments from July 2026 to June 2027, the recovery threshold is expected to be around $90,997. That number gets confirmed by Service Canada each year, but it's projected to be in that range based on CPI indexing. What that means is this. If your total income on line 23,600 of your income tax return exceeds that threshold, you'll have to repay 15 cents of OAS for every dollar over the limit. And for many seniors, a single large RRSP withdrawal is what pushes them over that line. Official Rule Explanation 3/630. Let me explain how this works step by step, using the official rules from the Canada Revenue Agency and Service Canada. When you file your income tax return, the CRA calculates your net world income. That's the number on line 23,600 of your Notice of Assessment. This includes all your income sources: CPP, OAS, employment income, investment income, rental income, pension income, and yes, RRSP or RRIF, withdrawals. If your line 23,600 income is below the recovery threshold, you keep your full OAS, no clawback, no repayment. You're fine. But once you cross that threshold, the recovery tax kicks in. For every dollar your income exceeds the threshold, you lose 15 cents of your annual OAS entitlement. This repayment is calculated when you file your taxes, and Service Canada adjusts your OAS payments starting the following July. Let me give you the math clearly. Let's say the threshold for the 2025 tax year is $91,000, just as an example. If your total income is $95,000, that means you're $4,000 over the threshold. The clawback is 15% of that excess, so you'd repay $600 in OAS over the year. But here's where it gets more serious. The clawback doesn't stop at partial repayment. If your income is high enough, you can lose your entire OAS benefit. The full clawback happens when your income reaches approximately $148,000 to $149,000, depending on the maximum OAS amount for that year. At that point, your OAS payment drops to zero. Now, let's connect this to RRSP withdrawals specifically. When you withdraw money from your RRSP, your financial institution withholds tax at source. The withholding rate depends on how much you take out. If you withdraw up to $5,000, they withhold 10% in most provinces. Between $5,000 and $15,000, it's 20%. Over $15,000, it's 30%. In Quebec, the rates are slightly different. But here's the mistake many seniors make. They think that withholding tax is the end of it. They think, okay, I withdrew $20,000, they kept $6,000 for tax, so I'm square with the government. But that's not how it works. That withholding tax is just a down payment. The full amount you withdrew, $20,000 in this example, gets added to your taxable income for the year. It shows up on your T4RSP slip, and you report it on line 2900 of your tax return. That $20,000 then flows into your line 2600 net income calculation, which is what determines your OAS clawback. So even though you only received $14,000 after withholding, the CRA counts the full $20,000 as income. And if that $20,000 pushes you over the OAS threshold, you'll face the clawback on top of the income tax you already paid. This is governed by the Income Tax Act and administered by the Canada Revenue Agency. It's not a mistake, it's not a glitch, it's how the system is designed, and it catches many retirees completely by surprise. Real-life examples, 6:30:11 Sach. Let me show you exactly how this plays out with two real-world examples. Example 1, Margaret's home repair. Margaret is 68 years old. She receives full OAS and CPP. Her annual income from CPP is $12,000. She also has a small workplace pension that pays her $18,000 a year. So her total regular income is $30,000. She's well below the OAS clawback threshold, so she's been receiving her full OAS benefit with no issues. In March 2025, her roof starts leaking. The contractor quotes her $25,000 for repairs. Margaret doesn't have that much in her savings account, so she decides to withdraw $25,000 from her RRSP. Her bank withholds 20%, that's $5,000, so she receives $20,000. She uses that money plus $5,000 from her savings to pay the contractor. Everything seems fine. Then, in April 2026, Margaret files her 2025 tax return. Her accountant adds up her income, $12,000 from CPP, $18,000 from her pension, and $25,000 from the RRSP withdrawal. Her line 23,600 income is now $55,000. She's still below the clawback threshold, so she thinks she's okay. But here's what Margaret didn't realize. She also received OAS during 2025. OAS is taxable income. Let's say she received about $8,500 in OAS that year. That brings her total line 23,600 income to $63,500. She's still under the threshold, so in Margaret's case, she's actually fine. No clawback. Margaret got lucky. Her income, even with the RRSP withdrawal, stayed below $91,000. But let's look at a different situation. Example 2, Robert's larger withdrawal. Robert is 70 years old. He receives CPP of $15,000 per year, a workplace pension of $35,000, and full OAS of about $8,700. His regular annual income is around $58,700. He's comfortably below the clawback threshold. In June 2025, Robert's daughter asks him to help with a down payment on her first home. He wants to help, so he withdraws $60,000 from his RRSP. The bank withholds 30%, that's $18,000, and Robert gives his daughter the remaining $42,000. And fast forward to tax time in 2026. Robert's accountant adds up his income, $15,000 CPP, $35,000 pension, $8,700 OAS, and $60,000 RRSP withdrawal. His line 23,600 income is now $118,700. The OAS recovery threshold for 2025 is approximately $91,000. Robert is $27,700 over that threshold. The clawback is 15% of the excess. That's $4,155. Robert now has to repay $4,155 in OAS, but he doesn't write a check. Instead, Service Canada will adjust his monthly OAS payments starting in July 2026. They'll reduce his payments by about $346 per month for the next 12 months to recover that $4,055. Robert is shocked. He had no idea this would happen. He thought he was just helping his daughter. He didn't realize that a one-time RRSP withdrawal would cost him almost $350 a month in OAS for an entire year. And here's the other thing. Robert also has to pay income tax on that $60,000 withdrawal. The $18,000 that was withheld might not be enough to cover his full tax bill, depending on his marginal rate, so he could owe even more when he files his return. This is the reality for thousands of Canadian seniors every year. A well-intentioned withdrawal turns into a financial surprise 6 months later. It's what to check, what to do. 11/15/30. So what should you do if you're planning to withdraw from your RRSP or RRIF? Or what if you've already made a withdrawal and you're worried about the clawback? Here's exactly what you need to check and what steps to take. Step 1. Check your current income level log into your My Service Canada account. If you don't have one, you can create it using your online banking credentials or a GC key. Once you're logged in, look at your current OAS payment amount. If you're receiving the full amount, that's a good starting point. Next, pull out your most recent notice of assessment from the CRA. This is the document you receive after filing your income tax return. Look for line 23,600. That's your net world income. Write that number down. Now estimate your total income for 2025. Add up your CPP, your OAS, any pension income, any employment income, investment income, and any RRSP or RRIF withdrawals you've made or are planning to make. Don't forget to include the OAS itself. It's taxable income. Compare that total to the recovery threshold, which for 2025 is expected to be around $91,000. If you're below that threshold, you're safe. If you're close to it or over it, you need to be very careful about any additional withdrawals. Step 2. Use the CRA's income calculator. The Canada Revenue Agency has online tools that can help you estimate your tax liability and OAS impact. You can also work with an accountant or tax preparer who understands OAS rules. Tell them you're concerned about triggering the clawback and ask them to run the numbers before you make any large withdrawal. Step 3. Consider splitting the withdrawal. If you need to withdraw a significant amount from your RRSP, consider splitting it over 2 or more years. For example, instead of withdrawing $50,000 in 1 year, withdraw $25,000 in 2025 and $25,000 in 2026. This keeps your income lower in each individual year and might keep you below the clawback threshold. Yes, you'll pay withholding tax twice. Yes, it takes longer to access your money. But if splitting the withdrawal helps you avoid the 15% OAS clawback, it can save you thousands of dollars overall. Step 4. Watch your RRIF minimum withdrawals. If you've already converted your RRSP to a RRIF, you're required by law to withdraw a minimum amount each year. That percentage increases as you age. By age 71, you must start taking these withdrawals, and by age 80, the minimum is over 6% of your RRIF balance. These mandatory withdrawals count as income, and they can push you into clawback territory even if you don't want to take the money. This is something you need to plan for well in advance. Some retirees choose to withdraw RRSP funds earlier, before age 71, to spread out the tax impact and avoid large RRIF minimums later. Step 5. Check your My Service Canada account in July. Your OAS payments are adjusted every July based on your previous year's income tax return. So if you made a large RRSP withdrawal in 2025, you'll see the impact starting in July 2026. Log into My Service Canada in late June or early July 2026. Check your payment details. If your OAS amount has decreased, that's the clawback kicking in. You should also receive a letter from Service Canada explaining the adjustment. If you see a reduction and you don't understand why, call Service Canada at 1-800-277-9914. They can explain exactly how your income triggered the clawback and what your payment will be for the next 12 months. Step 6. Don't panic. If you're already over the threshold, if you've already made a withdrawal and you know you're going to face a clawback, don't panic. It's not the end of the world. The clawback is temporary. It only lasts for 12 months, from July to June. Once your income drops back down the following year, your OAS will be restored. The key is to plan ahead so you don't trigger the clawback again. If you need to make another withdrawal, wait until the following year, or explore other sources of funds that aren't taxable, like your TFSA if you have one. Step 7. Keep records of everything. Keep copies of your T4RSP slips, your RRIF statements, your notices of assessment, and any letters from Service Canada. If there's ever a question or discrepancy, you'll need these documents to resolve it. Your common mistakes and warnings, 1530, 1830. Let me walk you through the most common mistakes seniors make when it comes to RRSP withdrawals and the OAS clawback, because if you know what to avoid, you can save yourself a lot of trouble. Mistake number 1, assuming withholding tax. Covers everything. This is the number 1 mistake. Seniors withdraw money from their RRSP, see the withholding tax come off, and assume that's the end of the tax obligation. But as I explained earlier, withholding tax is just a down payment. The full withdrawal amount is added to your income, and that's what determines both your income tax and your OAS clawback. Don't assume you're done just because tax was withheld. Mistake number 2, forgetting that OAS itself is taxable income. When you're calculating whether you'll hit the clawback threshold, you have to include the OAS you received during the year. OAS is taxable income, and it counts toward line 23,600. So if you're adding up your CPP, pension, and RRSP withdrawal, don't forget to add your OAS on top of that. It might be the few $1,000s that pushes you over the line. Mistake number 3, not planning for RRIF minimum withdrawals. Once you turn 71 and convert your RRSP to a RRIF, you must take minimum withdrawals every year. Those withdrawals are taxable income, and they count toward the OAS clawback. If you have a large RRIF balance, those minimum withdrawals can be substantial, especially as you get older and the percentage increases. Plan for this ahead of time. Don't wait until you're 75 and suddenly realize your mandatory RRIF withdrawals are triggering a clawback every single year. Mistake number 4, withdrawing large amounts in December. Some seniors make large RRSP or RRIF withdrawals in December, thinking it doesn't matter because it's the end of the year. But it absolutely matters. That withdrawal is income for that calendar year, and it will be reported on your tax return. If you're already close to the clawback threshold, a December withdrawal can push you over. If possible, plan your withdrawals earlier in the year so you have time to adjust if needed. Mistake number 5, not communicating with your spouse. If you're married or in a common law relationship, your spouse's income doesn't directly affect your OAS clawback. Each person's OAS is based on their own income. But if you're both withdrawing from RRSPs or RRIFs, you need to coordinate. For example, if one spouse is close to the clawback threshold and the other isn't, it might make sense for the lower-income spouse to make the withdrawal instead. This is called income splitting, and it's a legitimate strategy that can save your household money. Mistake number 6, thinking the clawback is permanent. The OAS, clawback, is not permanent. It's recalculated every year based on your income from the previous tax year. So if you have a high income year because of a large RRSP withdrawal, you'll face the clawback for 12 months, from July to June. But if your income drops back down the following year, your full OAS will be restored. Don't despair if you face a clawback one year. It's temporary, as long as you plan better going forward. Mistake number 7, not getting professional advice. Tax and retirement income planning is complicated. The rules around OAS, RRSP withdrawals, RRIF minimums, and income splitting are nuanced. If you're planning a large withdrawal, or if you're unsure how it will affect your benefits, talk to an accountant or a fee-only financial planner who understands Canadian retirement benefits. A few $100s in professional advice can save you thousands in clawbacks and taxes. Future impact, 1830 to 21 Withdrawals. So what does all of this mean for your future? Let's talk about what happens next and how to think ahead. First, understand that the OAS recovery threshold increases every year based on inflation. For 2026 payments, the threshold is expected to be slightly higher than 2025 because of CPI indexing. Service Canada announces the exact threshold each year, usually in December or January. This means that over time, you have a bit more breathing room before the clawback kicks in, but only if your income doesn't also increase. If your income is primarily from CPP and OAS, and you have a small pension, you're probably safe from the clawback. But if you're taking RRIF minimum withdrawals, or if you have rental income or investment income, you need to watch your total income carefully every year. Second, think about your long-term RRSP and RRIF strategy. If you're in your 60s and you haven't yet converted to a RRIF, this is a good time to plan. Some retirees choose to make voluntary RRSP withdrawals before age 71 to reduce the size of their RRIF and lower the mandatory minimums later on. This is called RRSP meltdown, and it can help you avoid the clawback in your 70s and 80s. For example, if you're 65 and you have $200,000 in your RRSP, you could withdraw $10,000 or $15,000 per year for the next few years to gradually draw it down. Yes, you'll pay tax on those withdrawals, but if your income is still below the OAS threshold, you won't face the clawback. And by age 71, when you're forced to convert to a RRIF, the balance will be smaller, so your minimum withdrawals will also be smaller. Third, think about other sources of funds. If you have savings in a TFSA, those withdrawals are tax-free, and they don't count as income. TFSA withdrawals do not affect your OAS. So if you're close to the clawback threshold and you need cash, pull from your TFSA first, not your RRSP. This is one of the biggest advantages of a TFSA for retirees. Fourth, consider the impact of one-time events. Large RRSP withdrawals are often triggered by one-time needs: home repairs, helping a family member, medical expenses, or paying off debt. If you know one of these events is coming, plan for it. Budget the tax impact and the potential OAS clawback. If possible, find alternative funding sources that don't create taxable income. Fifth, keep an eye on changes to OAS rules. The Government of Canada occasionally adjusts the OAS program. In recent years, they've increased OAS for seniors aged 75 and over. They've also adjusted the clawback threshold annually for inflation. These changes are announced by Service Canada and the CRA, and they're covered in the federal budget. Stay informed so you're not caught off guard. Finally, understand that the clawback is designed to target higher-income seniors. The Government of Canada provides OAS as a universal benefit, but they claw it back from those who have higher retirement incomes. The theory is that if your income is over $91,000, you're financially secure and you don't need the full OAS benefit. You can disagree with that policy. Many people do. But it's the law, and you need to plan accordingly. The good news is that with proper planning, you can minimize or avoid the clawback entirely. You just need to be aware of the rules, track your income, and make smart decisions about when and how much to withdraw from your RRSP or your RRIF. Calm Summary, 21/22-30. Let me bring this all together. If you're a Canadian senior receiving OAS, any withdrawal you make from your RRSP or RRIF is counted as taxable income. That income is added to all your other income sources, CPP, pensions, investment income, and the total is used to determine whether you'll face the OAS recovery tax, also called the clawback. For the 2025 tax year, the clawback threshold is expected to be around $91,000. If your total income exceeds that amount, you'll repay 15 cents of OAS for every dollar over the threshold. That repayment is taken by reducing your OAS payments starting in July 2026. The key to avoiding this is simple. Know your income level before you make any large RRSP withdrawal. Check your line 23,600 income from your most recent tax return. Estimate what your total income will be for the year. If a withdrawal will push you over the threshold, consider splitting it over 2 years, or look for alternative sources of funds that aren't taxable, like a TFSA. If you've already made a withdrawal and you know you'll face a clawback, don't panic. The clawback is temporary. It only lasts 12 months. Once your income drops back down the following year, your OAS will be restored. Just make sure you plan better going forward. And remember, this is not a secret penalty. This is how the OAS program is designed. The rules are published by Service Canada and the Canada Revenue Agency. You can find all the details on their websites, or you can speak with an accountant or financial planner who understands Canadian retirement benefits. The most important thing is to be informed. Don't make major financial decisions without understanding the consequences. A little bit of planning can save you thousands of dollars in clawbacks and taxes. Engagement Prompt 22/30-23. Withdrawals. Now I'd like to hear from you. Have you ever made an RRSP withdrawal and been surprised by the tax impact? Or an OAS clawback? Or are you planning a withdrawal this year and wondering how it will affect your benefits? Leave a comment below and let me know your situation. I read every comment, and I'll do my best to point you in the right direction. If this video helped you understand how RRSP withdrawals affect your OAS, please give it a thumbs up and consider subscribing to Retirement Path Canada. I post new videos every week covering CPP, OAS, GIS, and other retirement benefits for Canadian seniors. Hit the notification bell so you don't miss any updates, especially when new OAS thresholds or benefit amounts are announced. Thank you so much for watching. Take care of your retirement income. Stay informed, and I'll see you in the next video.